Brooks, to help the big three automakers, the Obama administration is preparing to launch a plan for struggling homeowners. The White House says the president will reveal the details in a speech on Wednesday of next week. For more on what Washington and the private sector can do to fight foreclosures, I'm joined right now by Brian Bethune, economist at Global Insight, John Sauro, president of North Atlantic Mortgage Corporation, and CNBC's Diana Olick. Nice to have you on the program. Welcome, everybody. John, let me kick it off with you. What would you like to hear out of the White House next week?
Well, you know, this has all been a crisis of confidence. What I'd like to hear is I'd like to hear the White House put some confidence in our real estate market. I find it hard to believe that bailing out mortgages is going to restore confidence. If anything, I think it's going to diminish it. It would be nice if the government can come out and stand behind our real estate and state that they're going to guarantee the value of our real estate going forward with possibly some sort of a tax incentive or a tax write-off to be able to write off any future losses on real estate for people. I think that'll get people back into the markets once they know that real estate has stopped dropping.
Okay, so that's what you really need to hear, some kind of a tax benefit in order to believe that we could see some confidence return.
Right.
Do you agree with that, Brian?
Well, I think that, yes, that could be part of the program, more specifically to deal with the foreclosure mitigation under the FHA. Some of those terms and conditions are, in terms of appraisals and the write-downs that banks would have to take, are in some cases reducing the number of restructurings that could take place. So I think that dealing with that issue of who will take the losses and whether there could be some tax benefit there, or perhaps the government could pick up a piece of that loss just to get the process going. The FHA Secure program has dealt with up to about 500,000 mortgage restructurings. That's only a small piece of what needs to be done out there. There's probably several million loans that are going to have to be restructured over the next year or two.
Diana, what's the talk in Washington? Would lawmakers ever consider a single large program to fight foreclosures? What are they working on as far as you're concerned?
You know, we don't know the exact details of what's coming out of the Treasury right now, only that it could involve some form of government-subsidized loan modification that would lower monthly mortgage payments. But there are so many programs out there right now, whether it's the FHA program or the Hope for Homeowners program, which involves the banks, or the IndyMac program with the FDIC. What they need is some sort of streamlined process that is across the board, that has the banks and the borrowers knowing what they're going to get, and it also has to be fair. And when I say fair, I mean that it's not just all on the government or all on the borrower or all on the bank. We all have to share in the responsibility for what happened in this housing collapse, because if you have a full bailout that's just for the borrowers, you're going to have a lot of borrowers in there who may default on purpose because they see they might be able to get a better deal. You might see people who are underwater on their loans, but not necessarily unable to make the payments, try to get in on this. You have to account for a lot of people who are going to kind of try to scam any kind of program that the government offers. But I think also you have to stimulate home buying. And that, as well as attacking foreclosures, stimulating home buying is going to help the housing market in the end.
Gentlemen, your thoughts?
Maria, I want to agree with Diana about the fair part. I've heard a lot of stories about people purposely defaulting on their mortgages and being told by the banks to purposely default on their mortgage so that they can do a workout or renegotiation. And so where does it end? That's my biggest concern. You can do a few things that will be a lot more fair, one being the tax incentive to let them write off the losses. There's another thing, though. The Fed has been buying Fannie Freddie bonds, as you know. If the Fed were to buy the 4% to 4.5% coupon bond as opposed to the 5.5% coupon bond they've been buying, that would bring rates down across the board. That's going to be very fair for everybody and not just for people who are in trouble. Because I've got a lot of clients, and we've heard a lot of stories of people who've been working hard to make their payments, working second and third jobs. It's not fair to those people if they don't get part of this deal.
Brian, what about that?
Well, I think that's the general direction. My guess is that most of these situations are genuine problems. When you look at the number of job losses, the sharp declines in housing values, I would say the majority of these are really, truly distressed situations, and only a small fraction would be people that would be deliberately defaulting. But on the side of the Fed,
hang on a second, Brian. Can I interrupt for a second? You say it's a small fraction. How are you going to monitor that? I mean, it's very easy to just stop paying your mortgage and default on it. It's very easy to do.
But we also, gentlemen, have to look at one other factor that you just talked about, which is unemployment. We talk about a lot of folks who want a modification because perhaps their loan reset at a higher level. But there are a lot of folks out there who simply can't be helped because they can't pay any mortgage payment because they've lost their job. What are you going to do with those folks? You're going to have to let them go into foreclosure. The question is, are you going to arrange short sales? Are you going to get buyers in there to absorb these properties so we don't have ballooning inventories any more than we already have, which puts more pressure on prices?
Brian?
Yeah, well, I think that by and large, I think this is economic stress. It's not people deliberately electing to do this. If you're in a situation, I mean, it all combines. Obviously, if you're under economic distress, you've lost your job, etc., then what happens is people do throw in the towel. But the causal factors are really the economic factors, and I don't think people are trying to scam the system at all. I do think, however, that the Fed can weigh in here and be much more active in not only the mortgage markets but in the long-term Treasury markets. They have flirted with that idea for several months, and I think it's time for them to move on that because we're seeing a lot of volatility in those long bond yields. That's translating into volatility in mortgage rates, and the Fed can do something about that.
All right, we'll leave it there.
Brian's right about that, absolutely.
All right, good conversation, everybody. We so appreciate it. Thanks very much.
Thanks, Maria.
We'll talk with you soon. Several